TGIF Warriors, last Friday of 2024. Okay, we're turning the page. How's everyone doing today? Sinatra, RC, Hugo, Glenn, everyone doing all right? Okay, more and oh, Andrew, I haven't seen you for a while. Glenn, all right. So, a couple things I see this morning I'd like to share. So, looks like the relentless yield trade might be concluding here. Yeah, nice little reversal. I don't think it's going to be a big correction, but it ties in with what's happening in U.S. dollar yen too. If you recall, when we were at the first high up here, I said there's no way this is a high because of this, right? So we're at new highs, and we diverge, but it's still too much mo. So I'm thinking this could be a drive two setting up, and we get a pullback in yields and um, pullback in the dollar, and then run one more time. So the other thing I just wanted to bring up is that the Nasdaq retraced 78.6. Keep an open mind. Starts doing something negative. This could be a failing rally. Same in the S&Ps. Or we could hold a break and blow off to the upside. Anyway, I have some feelers in there. I did them yesterday in case it is a failing rally. I'll tell you what, the bonds, they can't get out of their own way. I see this divergence, right? I just have a hard time. I need price action too. I don't have any good price action yet. And I think that I talked to Jim, I don't know, a few weeks ago. I think he's thrown in the towel, stopped out of longs, and I guess we'll see. It's not another great week. And
By the
they
way,
really,
and good morning, Dale,
hey, man, yeah,
TGIF.
go ahead. Yeah, buddy. Hi.
Yeah, I was just going to say sentiment is really, really
I
pretty
know.
extreme as
Yeah.
well.
Yeah, bearish.
Yeah, it's a very, very bearish extreme, which
Yeah.
at this stage could get a bounce. I actually posted a chart of the 10-year in our chat room, but I'll show you
Let's
after
see.
you're done. No. I want you to go ahead.
Okay.
Yeah.
So we'll see. That's the one bullish argument about the bonds is positioning. There are huge short positions, not just sentiment, huge short positions in treasuries. But if you didn't know that, would you be buying it or wait for it to do something right? Okay, so S&Ps are down as well. They're having they're going to close positive on the week. And all those stocks that Blake and I went over yesterday, um, most of them are diverging. So, for example, and I still think that this is what's needed to really get a correction going is Bitcoin to fail from here. So far, it's a higher low off this, but anyway, Amazon looks like it's rolling over, right? Apple's just, you know, a champion. Meta, not even close to the highs that we had December. Google looks like it's rolling over. Netflix looks like it's rolling over. And look, a lot of these made new highs. Meta was pretty classic at its new high. And on the daily it was even better. So I don't know if Zuckerberg's in the club. Um, and here's Nvidia. It's for trade 61.8. I'm back in. So we'll see what happens here, guys. I'm glad it's Friday, though. How about you, Blake?
I'm
I
happy that it's Friday. It's days like this. I'm like, I wanted to sleep in, and I'm like, oh,
yeah,
but the markets are still open, so my eyes like automatically pop open no matter what. So I'm excited for the weekend, to be honest.
yeah. I would be glad when we're back to you know full market strength the week after this.
Yes. Yeah.
Yeah.
Yeah, we were just discussing about, kicking things off again January 2nd, which is, the middle of next week or the end of next week. But still the beginning of next week, we're still going to have liquidity issues. The market's
Yeah.
still going to be open. But hey, guess who's here today? You got Stelios here today.
So yeah.
Yeah.
So let me Stel. I'll get the schedule to you today.
Yeah, no
Uh,
problem.
okay. Here's silver. The rallies have been pretty weak, haven't they?
Yes, yes. I mean, it's been ever since Trump won the elections and cryptos have been rallying, metals have been selling off, which is kind of to be expected. There seems to be a big rotation from precious metals to cryptos, which one asset class is completely different to the other, but there's definitely correlation and algos working there. But anyway, let me take
Okay.
the charts for a few minutes and then hold on. Share. Where am I? Where am I? Share screen. There we go. Desktop
Deemy's
one.
saying, "Hey Dale, go back to bed." All right, Deemy.
Nice. So
Call.
I'll start with yields like I always do, and because you mentioned them as well, and we have one level above here, which is that 474 high. Actually, if we should go back, we do have 5% ish, but we have to ask ourselves what the markets are pricing. And if you look at 2-year yields, we're at 4 3/8 roughly, which is basically the where overnight Fed funds are. Um, if you look at 5-year, we are almost at 4.5. You look at 10-year, we're at 460. So really, the curve is very flat. So for the 2-year or the 10-year to go higher than here, what does that mean? That means that basically cuts get taken off completely, which I think is very far from what reality is going to turn out to be. And I was speaking with a friend of mine. There are so many conspiracy theories out there. I've lost count, but there is something that quite a few people are talking about, and there is some evidence, which is that the BLS has been purposely over-reporting job numbers, and we see this with the annual revision that they do. Right, they report more and more every month, and then at the end of the year, they go, "Oh, by the way, it was 830 something thousand less." So, what happens now with Joe Biden out and Donald Trump coming in, who, by the way, Trump and his Doge team have said that they're probably going to be dismantling the DLS in some way. So what do they do now? Well, my guess is they're going to start showing really bad numbers, which is not going to be um, it's not going to be something false, but it's going to be the truth. So I think that in the beginning of next year, employment numbers are going to be turning very sour. And with that happening, I see really no way the Fed cannot cut quite a bit more than the market's expecting. So my view for yields remains that they go to the downside. Of course, in the short term, could we test these highs? Of course we could. But I think the market's really, really not prepared for lower yields at all. And that's why I think is another reason why we're going to have lower yields. Um, but one step at a time, I think for now, yes, the 10-year has broken above this zone that we had here. So it's looking, the yield is looking bullish. But like you said, Dale, I think momentum is kind of slowing. And I do think that the next move is going to be to the downside. Um, and of course, if that happens, I think we're going to see the dollar move lower as well. But for now, the dollar is the king of the currencies, and frankly, I don't see why it shouldn't be. Because if you look at the eurozone, it's a disaster. Look at the German economy, the French economy, pretty much every economy except Greece. which is doing well. So the euro is under pressure because of fundamental economic data. The UK is not doing any better, so the pound is also under pressure. So with then you just have the yen out of the four majors, right? Which has been doing better recently, but still. Um, it's still very high in terms of historical levels. So very high, I mean the dollar yen, so the yen is low. So, uh, if you look at the four majors, the dollar is doing best of all, and theoretically it should be. But as I said before, I think we're going to be seeing some not good data from coming out of the US in terms of employment next year, January, February, March, and I think that's going to change the picture. For now, though, this is what we have, and
Hey, Stelios,
frankly,
what
yes.
makes you think that? I mean, what makes you so pessimistic on the U.S. Employment data
Well, we're
coming?
hearing everywhere about layoffs, right? Everywhere. And even, I was going to say Bernanke again. Even Jay Powell said it. He said that if you have a job, you're doing well. But if you're looking for a job, it's very difficult. He said it in his last press conference. So,
Yeah.
um, I think that the numbers that we are seeing are not reflecting the quality and the direction of the job market in the US. And I'm not saying that other countries are better. I think there's going to be a severe slowdown in the Eurozone everywhere. But the US job market in particular, I think, they've been painting a very different picture to what is underlying. And you see this also in um, the number of multiple job holders, all the details, in terms of skilled jobs versus non-skilled jobs. And the trend is really not what you want to be seeing. You want to be seeing higher numbers of skilled jobs rather than muck jobs and the less skilled ones. And you also see people taking second and third and fourth jobs, which is usually not a good sign, right? People don't take second and third jobs because they want to. They usually
I live in a well, I live in the fifth largest metro in the United States, which is still just crazy to me, being from here,
yeah.
watching it explode over the years. My nephew is a 28-year-old, educated, had a great job. He actually quit his job due to basically the owner of the company being a jackass, but that's another story. But he quit his job with the idea that he could easily find another job easily. And yeah, he's 3 months into his job search now. 3 months.
Mm.
And like I said, he's very well educated. He basically has a business management degree and ran this small business for the owner of this company, for a small company. And he's very, very skilled, and he just cannot find comparable work right now, which is
You know
Yeah.
interesting.
what? I got to keep you guys away from Danielle DiMartino videos.
Yeah.
No, but
Hey,
this
man,
is
happy
real
days
life.
are
This
here
is
again, man.
this is real
What?
life, though. I mean, he's seriously struggling. I mean,
No, I've heard that, Blake. Really,
yeah. I
some
mean, I just saw him like literally 2 days ago. So
I'm sure he's going to be
I just
fine then, but it is difficult, right? It is more
yeah, it
difficult
is.
than
It
it
is.
was a couple of years ago. And so yeah, that's my view, and let's see how it turns out. Now the interesting thing is equities, which with yields inching higher and the dollar inching higher, theoretically this is not good for equities, but again, I'm going to repeat myself. I'm sorry, but I see nothing bearish about this. Should we be chasing this higher? I don't think so. But if I was already long, I wouldn't be worried at all on this. You really need to see a move below 56.70 or something like that for me to say, okay, now maybe we're changing in the trend. So nothing bearish about it at the moment. Um, let's have a
could
look
we
at
get to
gold.
could we go to your purple if you go back there? Uh get down to your purple zone?
52, 53. Yeah, we could do. Yeah, I mean, if we break below here, below 56.70, that's definitely the level of interest or the area of interest for me. The big one is probably the 4800 one, which goes all the
Yeah,
way back.
that was a breakout.
Yeah,
Yeah,
it was a breakout. It was a high in
yeah,
2022. That's really the big level, and I think that's
yeah.
eventually going to be a magnet. But for now, I see absolutely nothing to tell me that we are turning in any way. We will eventually, but I think it's very easy to try and pick a top. And if you try to do that over the past year, well, you've been burnt every time. So you need to have
Not
patience.
really.
R- Well, yeah, you could, there are
I
obviously
mean, there were
moves.
good trade. I mean,
Yeah,
even in a bull market, there have been good
yeah.
reactions.
No, I agree. I agree.
If you didn't marry this, if you didn't marry it,
Yeah.
yeah.
Um, let's have a look at gold. Gold is moving sideways. Okay, it's down from the highs, but given that the yields are going higher and the dollar is going higher, it's still doing very well. And remember, if I go back, look at the monthly chart, or maybe even a weekly is better, a little bit more detail. This is exactly what I had been saying here in the 2021, 2022, when the Fed was hiking, everybody was hiking, and the gold was going sideways. And I was saying, look,
You
this is
did.
really, really strong, resilient price action. I would have expected
Yeah.
gold to have dropped below the lows, but it was resilient. So again, as we are moving now, yes, it's below the highs, but it's moving sideways. And I think if yields go lower, which I think they will, and if the dollar goes lower, then this is definitely going to be a positive for metals overall, especially gold. Silver's trading less well than gold. It has been underperforming. Gold-silver ratio almost at 90. It's still my preferred long, along with platinum, because I think it has a lot of catching up to do. But look, we're right in the middle of no man's land. I do have a position. I have my core longs from 2310, which I'm not touching. I got some more at 2975 a week ago, and I'm long platinum from 920, 920, and
Back up the truck at 27 and 26 if we get there. And I think
uh,
Grega thinks we could get there.
27. Yeah, of course we could. Of course we
Yeah,
could. Yeah, I'm gonna be adding a lot more down here if we get there. Platinum is
yeah,
nice because it has. I was on the chat room when I got some 920 when we were
yeah.
up at
That was a
this on this trend
perfect,
line.
perfect long, good entry.
It was really nice, this trend line had held really nice. Of
Uh,
course, we're very close to it still, but I put my stops right about below there. So if that doesn't work out, it's not gonna hurt too much, and we move on to the next one. But yeah, metals are, silver is in the middle of no man's land, and yes, I want to be slowly accumulating, but I'm not rushing it yet. We have to talk about cryptos, which have been on a tear, and this move has been huge, a 100% move from the lows. The problem with crypto is that there's a lot of expectations now from Trump. He said a lot about the crypto reserve fund or whatever they want to do, and so the market's expecting a lot. So my reaction always is when the market's pre-pricing something before it happens, I don't want to be in it. So could we go higher? Of course, we could go a lot higher. Bitcoin. Yeah, people are going to hate me for saying this, but Bitcoin's value is derived from what people are willing to pay for it. There's no, it's not used as a currency. People don't buy stuff with it. Oh, yeah, maybe people do, but it's a, 0.01% of the global trade or global transaction. So for me, that's not its job. Its job is for speculation, and it's
boo,
a really good
boo,
speculative asset. I mean, this is what the younger people, the younger
boo.
generation. I have nephews like Blake does. I have nephews who are really young, and they're like, "Why are you trading, gold and dollar? I made, 500% on, fart coin or whatever it was." And I'm like,
Fart
"Okay,
coin, fart
you can
coin.
you can trade that, make whatever money you want. It's fine by me. I just don't see the value in it, and I don't see the
Oh, you
fundamentals."
old yuppie.
I know I'm a dinosaur. Hate me for saying that, but it's just something I'm not going to get involved in. And Ethereum is the same. Actually, Ethereum's trading worse. Bitcoin and Ethereum is a bit like gold and silver. Gold is higher,
Yeah,
silver is underperforming.
you're right.
Ethereum, yeah, same thing. Actually, I'm going to redraw this. I'm going to delete that and redraw things. But yeah, so that's it from me as a kind of a
How
uh,
about oil? Oil.
Oil, oops, yes, oil is very close to these lows. I've said
It's
for
really
weeks that
coiling.
I think it's coiling, and I think we're going to break lower, and I think that's going to come in line with a general decrease in economic activity. If you know if what I think will
Oh,
happen with employment happens, then oil is going to be dropping below
all right.
five.
Still officially, you're calling for a pretty serious
I,
recession
I,
in the U.S. in 2025.
I'm
Say
not
it.
saying we're going to see COVID stuff, COVID markets, but
No.
I think that the risk is for a downturn. That's what the big risk is for me.
Okay. How about housing here? That's starting to, that led the way.
Yes,
Anyway,
and
we'll see.
commercial real estate, from what
Yeah.
I read, I'm not in the US, I don't know personally, but from what I read, it's really not a good situation at the moment. So,
I think we're getting into the rollover period, Blake, where,
Mm.
people who got those loans, they're 3 or 5 year loans or sold paper, are going to have to roll it. And where rates were and are, that's going to cause a lot of problems. People aren't going to be able to refinance and have it make sense at triple the interest rate costs.
yeah.
Yeah, and there's some of those creative loans that have been out there now, and it's interesting about I want to say it was about and I'm not a real estate investor. Everybody knows me knows that it's not my
Yeah.
gig, so I try to stay away from it. Not that it's a bad thing. It's just something that I don't do. But I think our home prices peaked probably about 2 years ago, and I thought at the time, I'm like, well, we'll just put our house on the market and sell it, because we knew we were going to be empty nesters here in the next year or so. So we were like, well, we'll just kind of rent for a couple of years until we figure out what we want to do, and we ended up not selling, but we thought in the meantime housing prices would come down, and they really haven't. And I think the housing market still is pretty steady. Everybody knows the reasons why, but but I do believe that if the employment picture turns weaker, then that's going to eventually bleed over into the housing market, because you're going to get people that have to sell. They have to sell because they can't make their
Yeah.
mortgage, or maybe they have to relocate for a different job. That they got somewhere else. But I think the
I
housing
think you
market's
hit the
pretty
nail on
stable.
the head. Yeah, you hit the
Yeah,
nail on that. So if you
yeah,
need your income to pay your mortgage, you're at more risk than people that don't, that have passive income that
yeah.
covers their monthly overhead,
I
which
mean,
a lot of people do.
it's hard for me to gauge from where I live, and from my point of view, just because there's so many cash buyers around. I mean, people come in and they just buy, whatever they want in cash, and it's crazy. It's a lot of it is still private equity too. So anyway, hey, you guys were talking about I wanted to go back to the what's happening in the dollar, just because the dollar is probing, in my opinion. You look at the euro, it's probing some pretty key levels of resistance. Now, we're supposed to have dollar buying into year end. If you're not in the Forex Analytix chat room, and you haven't seen like all the research reports that are in the news and research room, that's our chat room here. But there's a lot of information on end of year flows, month end and year end flows that are up here, and a lot of 2025 outlooks that are being posted from Goldman Sachs and BlackRock and stuff. If you want to get that information, just make sure you're in the Forex Analytix chat room. And as I mentioned to you guys, I'm going to mention this in passing. 2025 is going to be a big year for Forex Analytix. We are going to be expanding our team. We are going to be making a lot of Forex Analytics very accessible to all of you out there, and our pricing is going to be more beneficial to everybody out there. I think based on what you guys are going to get. So just we have big things planned for 2025. So make sure you guys are all staying in tune with what we do. Anyway, uh, if we are supposed to get dollar buying into year end, this is the place that you want to short the euro, right here, because your risk is, and this is like just a trade setup. If if it's going to fail, it's going to fail at these levels. If we start breaking above 104.50, then that means that, you know, a lot of the flows have been done already. And that was a lot of the reports have said the dollar flows are going to be not very heavy, but they're also going to be spread out throughout the holiday. So so if they've already been done and we get the euro above 104.50, that's going to be pretty bullish. So I want everybody to know this is a huge pivot. Like I said, this is a do or die level for the euro. And and also if the flows are already done already, or the majority of them are, maybe the euro does start to get a little bit of a squeeze. The one thing I have to say is the euro is holding up very, very well. And it's I mean, Stelios, isn't a little shocking how well the euro is holding up? I mean, you look at you were just talking about year-end, or excuse me, expectation flows, you know, buying the dollar because Trump's coming into office. We got tariffs coming. Europe is, how many governments have, you know, we got the German government, the French government. What other governments are going to fail out there? Eurozone data sucks. I mean, aside from being in Greece, it probably stinks to be in the rest of the Eurozone. And yet the euro hasn't really broken down. We're not at parity where a lot of people believe we should be. What does that tell you about where the euro's at and what the dollar might be doing?
Well, that's the thing, you know, we've been going lower in euro dollar in anticipation and because of the bad economic data in the eurozone compared to the US. But as I said before, with all that's been priced in now, and we can all agree, yes, the eurozone economy is going down the drain, but the US economy is not doing that badly. Well, which way can it go now? I really do think that the dollar is going to be dropping in Q1 of next year, and as a result, I think the euro dollar is going to be rising, even though the eurozone economy isn't really doing that great. But you know, we've already dropped quite a bit below. Why didn't we go to parity? I actually thought we probably, you know, might have got there as we price all that in, but we didn't. So that shows me that the pair probably has more strength coming to it, which is a bit
Yeah,
nonsensical if you think about the economic part of the of the
right.
equation.
And Mike says it's a positioning thing. And look,
Yeah.
Mike, the speculators are not at all-time highs, or you know, for shorts. Right now that we're probing levels that we haven't seen since 2022, but you go to you know, 2015, 2016, 2020, 2019, the market was way more positioned speculative wise short euros. But I do agree with you, these are the highest levels we haven't seen in years for shorts. So I do believe it's a positioning issue. It's something that I've constantly said over the last couple of months is the market is very, very long of dollars and they are very short of euros. And the fact of the matter is the euro is not going down. And that's the thing that you have to be really, really careful with, because it's like the beach ball underwater. And when you go into this election, this inauguration, with the expectation that the dollar is going to strengthen, and you know, with all these tariffs, all we need, and I know I've said this a few times in recent weeks, all you have to, and if I was the Trump administration before I took office, I would actually say something about the dollar being too strong. I would do it before I took office, because you want the dollar to get a you know, all he has to say is like, Dale, you said yesterday, we were talking about this, you know,
Yeah,
the
a
dollar's too
tweet.
strong. Just tweet about it. Just tweet the dollar's too strong. And next thing you know, the euro's trading at 106, and then it starts to go.
Yeah.
Sterling's back at 130, and next thing you know, the dollar, you know, dollar yen's trading at 155. And now you have a head start with a weaker dollar heading into your administration
Yeah, you would
inauguration.
at least start to break the momentum of the trade.
Right. And
Even if
so
that wasn't the coup de grace, it would break the momentum and then be
yeah,
reconstructed.
so that would be my opinion. You know, just going
Okay,
into
and let's say
I told you to run. Even though I really wanted Steve to run, but
okay, and
speaking of
he
which,
wasn't
Steve is
born.
here. Steve,
let's
what do you got
assume
to say
that you
about that?
succeed in weakening the dollar. What does that mean for inflation?
Low deflationary.
Yeah, I mean, it would kick up a little bit for inflation for sure.
Yeah, but
But you know,
inflation is already a lot above target. So kicking up inflation
Yeah.
Immediately also means that you make it even harder for the Fed to cut rates.
Yeah.
Yeah,
It's not as simple as you think, guys.
No, we understand it's not that simple. I mean, there's a lot of moving parts. It's hard for the Trump administration to administer what they want to do with a strong dollar as well. So you got to pick your poison, right? Um, I mean, that's what has to happen. You got to figure out what is the best way about it. But I think that's what if I didn't want a strong dollar, and they obviously don't, which has been the stance of JD Vance, it's been the stance of President-elect Trump, that's the way they're going to achieve it, is let's start engineering it lower. Are they going to bring in a mix of problems? Hell yeah, of course. Real quick, and Steve, I want to get your opinions here on a few things since you are here. Dale, when we first started this show, you talked about yields, and I'll just show you guys in the chat room. This is a chart that I posted earlier this morning. This is the 10-year, and we are at the 127% extension. And you talk about the underside of a broken trend line channel.
Nice look.
Yeah, and we're at the underside. We're at the 127% extension. We've been stuck here for like the last couple of days, obviously because of the holiday. Whoops, I didn't want to do that. But if you look at the news and research room, let me take you over to Daily Sentiment Index. Here's your DSI. You'll notice that the notes are at 12, which is really pretty bearish extreme. So when you have, those types of extremes, that means that yields are higher, but at an extreme up at these levels. So that's why I found it a really interesting chart that you brought up, Dale. If we really start breaking lower, it's going to feed on weaker yields, and I think the market's trying to lean into dollar strength into year end. And so if yields actually do roll over the next couple of days, maybe the euro does pop to 105. Maybe
that's what I'm thinking. Lower yields, maybe back to about 440. And the dollar pullback.
Yeah, I mean, 440 would be right here to where this green line is, and then Dale, we would have and I'm gonna just go to the dollar really quick, and this is the question I've had, and talking to Jim Welsh, which I will meet with today. We don't know if this wave 5 that we have here, if we completed here at the 127% extension, or we go a little bit higher towards the longer term 127% extension. But this is, clearly 5 waves. And if we break through channel support, which would be right here at 107.30, then you would have 5 wave completion. Then the next thing you're probably looking at more of a this would be a, what do they call it, a cipher, I believe, which would take us somewhere down around 104 longer term. But these are the types of conversations, if you guys aren't having them in the Forex Analytics community with us, having conversations like this and posting your charts and being able to talk it all out, make sure that you try Forex Analytics. Remember, this is the first time we've ever given 40% off our semi-annual subscriptions. They were only 30% off for the last 8 years when we'd have specials. So 40% off semi-annual. Take advantage of it, because this is our New Year's offer. And if you guys didn't catch it, we were just a couple of days from New Year's. So take advantage of it over the next couple of days. All right. Steve, you're here, and
I have a guest here. I have a guest
Steve,
here,
you're our
Blake.
guest. Oh, we do have a guest. Shoot.
Yeah.
Okay. Well,
right.
before
you had the wrong one earlier, and then you forgot and the right one's here.
And the right one's here. Okay. Well, before we cut off Steve and bring in your guest, Steve, any last minute words before we go? I'm so sorry.
It's okay, mate. It's nothing urgent. It's not that I expect something to happen in the markets, today or, in a few days ahead. So we have plenty of time to talk about it.
And you know what? We're going to be on the Morning Edge, which is a private show for the Forex Analytics subscribers. We'll be on the Morning Edge, Steve and I, in about 40 minutes from now.
We always have plenty of time to talk there.
Yes, we'll talk. We're right here, and we'll see you guys here in about 40 minutes for those of you that are members.
Enjoy the interview, Dale.
Yes, have a great interview, Dale.
Yeah, thank you, guys.
All right. Thanks, everybody.
All right. Have a good weekend, Steve, Blake.
You do,
See you
mate.
guys. See you guys Monday. There's part of the dream team, and now I get to talk to a guy who really has his finger on the pulse of the precious metal market. You should stick around. Welcome back, Bob. How are you? Have I unmuted you?
Did you bring him over? Oh,
Oh,
there he is. He's coming over right now. He's here now.
okay. I
All right.
had that block thing. Yeah. Are you there, Bob?
Yeah, can you hear me?
Got you now.
Oh, okay.
Yeah. Well, happy holidays to you, buddy.
Yeah, you too, definitely.
Yeah. So, metals under pressure, but I've seen, I think everyone should put your stream in there if you're interested in metals. Um, follow Bob. Follow Bob on X at Profits Plus ID, which stands for Idaho, because he posts some great charts. In fact, yesterday, Bob, you were showing, I believe it was the World Gold Council, and how the stockpiles have been rising. What was your point with that?
Well, it just goes to show that, the markets try to make the metals look like a pet rock. And obviously BlackRock and Vanguard and there's a huge push for digital and crypto and it's
Yeah.
this idea that the metals are no longer relevant, I guess, in today's
Yeah.
society. And it just goes to show, that chart was kind of an eye-opening one where it's like, hey, these central banks are building their reserves back up to where they were back in the 60s. Now, one person made a pretty good comment, in terms of reserves relative to, their entire balance sheet, maybe that's a lot lower than it was back in the 60s, but the idea is the trend, trend is your friend, I guess you could say.
Okay. All right. So they're building back stockpiles they haven't had since the mid 60s. So
Yeah.
what's the point is, um, they fear a 60s type of economy. Is that
Yeah,
why they're
either that or they're trying to get to, build up neutral reserves, neutral reserve assets, whether it's the dollar or their own currency, coming under pressure. That would be my take is that there's a growing concern with all this debt and, this idea that there's no way out of it, and you're bringing in a new administration, which brings in uncertainties, and the direction that this country is kind of has been going for some time in terms of you know basically borrow and spend and you
Yeah.
can play the with the maturity levels and so forth like Yellen did, but debt is debt, and that's one way out of it is to inflate it.
So any comment on the gold silver ratio where gold has really been outperforming and
Yeah.
still doesn't look done? I think we're going to go low to mid 90s on this.
Yeah, that this has kind of surprised me how it ran back up that high, given what I'm kind of seeing on the physical side, the industrial side, demand for actual silver and so forth. And I put out these charts. I talk about the exchange for physical premium, which is that difference between the the London spot price and the New York futures price, the lead month futures contract, and there's a typical what they call spread trade there, and a lot of institutions, a lot of professional industry players use that EFP as a way to uh, hedge the uh, the difference in the spread. And typically that spread, just like a futures contract, as it gets closer to expiration, or like options, as it gets closer to expiration, that spread should be dropping naturally, because as you get closer to the end of the lead month futures contract, it goes to parity with the spot price. But what you're seeing though is really the last 2 weeks or so that EFP is doing the opposite. It's actually going up, not down, and that's causing potentially a lot of losses in the banks, because the banks typically are the ones who short the
Yeah.
EFP. And so what we've seen is, and this is where it gets really esoteric, but there has been almost a demand for physical 1,000-ounce bars and then to put them onto the exchange or use them as collateral for
Right.
the COMEX and then short the futures contract against that. But what's happening is the spot price isn't really reacting to this. It's the premium on the 1,000-ounce bar that's been going up. And so I think it's been very frustrating, I think, for investors watching this, especially like for me watching this, because it's like this doesn't make any sense if there's such demand for 1,000-ounce bars, yet the only thing that's going up is the premium for those products, not for the metal itself or the spot price itself.
Okay. Yeah, I'm looking at this. It's really silver looks like, I don't know, 27, 26 is coming. I don't think we get a good rally in silver until the dollar turns. Gold can do better. I think that may be the reason behind it, that gold can fight the dollar. Silver has a harder time doing that. So anyway, I'm interested in what you saw in the ETF and SLV, because that could be a fuse that lights it. Do you think they
Yeah.
could hold these positions, say, and be successful for about 30 days, 60 days? Because that's when I'm looking for lows to come in the next month or so.
I mean, anything is possible in this market. The question is, how much capital does the banks have, and how much do they want to risk by, holding the price down, so to speak, would have to take, a broader, I guess, market to be maybe negative on the silver price. But the way this EFP is working, it's working opposite against what maybe the price action is saying. I mean, when the EFP blew out back in 2020, for example, that was the lead to a massive rally in gold in March of 2020 when you had that big drop.
Yeah.
And
COVID.
then COVID, and then you also had, which people may not have realized, the same thing happened with silver about a month later, where that EFP blew out, and that ignited a massive rally. So these, and I look for these types of things because they're irregularities. They're not common. They don't happen all the time, and so
Right.
it's telling us that either there is a liquidity
There's a
constraint.
squeeze going on. Squeeze is happening.
Yeah, there's some type of liquidity event that's happening. Whether it's like you said, upside or downside, it's hard to say, and it could be, indicative of the overall market too. The metals are extremely sensitive when it comes to liquidity, and if things are blowing out and not making sense in the metals markets, maybe that's something that's coming for, for the broader market. It's obviously it's nice to have a crystal ball, but we can only watch the crumbs that are in front of us.
Yeah. So we're, but they're important. What you're seeing is that there's people stuck with a lot of paper that they can't deliver against, and
Yeah,
they're taking extreme measures, looking for substitutes because the contract specs are not being met, because they can't find that inventory.
right. Now, yesterday, I didn't post this, but yesterday the platinum EFP blew out $20. I mean, the platinum, I
right.
think the lead month contract's January, but
Yeah.
these things don't I mean, obviously, the last 2 weeks of the year, it's extremely illiquid, and you can get some volatility. But these EFPs are big markets. I mean, you have to be a very, very big player to be to really be involved in this, because it's tied into the entire spot futures markets. I mean, it's the bedrock of those two markets, kind of linking them together. And so
Look at this, Bob. In 2 years, palladium has lost 2/3 of its value.
platinum
It's
platinum
gotta
was the
be.
one
I know, but that was palladium.
yeah.
Platinum's been sideways for 3 years.
I think
Right?
platinum's been sideways
Right?
for It's been sideways for 20 years.
We need more catalytic converter demand, huh, buddy? Anyway, so what's the feel from the public out there? They're discouraged.
Oh, complete. It's from what I kind of see out there, the public is extremely frustrated. I mean, obviously on the miner side, they're people are throwing in the towel. They're done with it. I mean, this makes no sense. They're just
I'm buying them next year after
yeah.
this tax loss selling. I'm buying them.
Yeah,
They're cheap.
there's a lot of frustration out there. And of course you got Bitcoin and all that stuff going
Right.
straight up in your face. And it's like, yeah, and the funny thing is you look at Newmont Mines, I mean, this thing has done a complete round trip. I mean,
It's a higher low though, right here.
yeah,
Look at the low in
potential.
24.
It looks like an inverted head and shoulders building there.
Well, you're the technician. I'm just a host of F.A.C.E, bro.
Yeah. Well, check out this one. This is AMARK, AMRK. This is the biggest wholesaler. They own a lot of retail dealers. They have an interest in Sunshine Mint or Sunshine Mining or Sunshine Mint. A bunch of other refinery minters and so forth. This is the industry basically. And if you look at it, this thing has done a complete round trip from early 2024. That's what the industry has been going through. And I've been trying to explain that to people and to clients that there's risk building within the industry. There's, the balance sheets are stacked. They may have a lot of metal on hand. A lot of people have been selling metal back going into IRA season. So a lot of dealers, you see the bids, especially on the spot dealers, the physical, online guys, bidding $3 under spot for 100-ounce bars, $3 under spot for 1-ounce rounds. I mean, it's horrible. So the public is seeing sort of this, not just the price action, but when they go to sell back, they're getting really slapped in the face here. Right. Yeah, they're not making any money at all. The ones who made money the last 3 years have been the dealers, hand over fist. And this is something that I've been trying to explain. Why support, these online dealers that really have built a model for themselves, not necessarily for like a market maker, for example, that's actually trying to do right for the client. All they're doing is just widening spreads, based on supply and demand.
I bought some metal from Bob, and it was a straight deal. Just in case you guys want to, around $27, 26, I'd be buying it. Anyway, and the miners too. I mean, that's great to hear because that's my plan. A lot of this is tax loss selling in the miners too. Most people reacted. They had FOMO after they had doubled a lot of these things or tripled, and they buy the miners. But yeah, there are some guys that have been right about the market but wrong about silver, wrong about bonds. Yields are part of it too. Do people feel squeezed, Bob, because maybe they have to deal with floating rates and these rates are bothering their models?
Yeah, definitely. It's impacting the industry. The cost of carrying inventory has been rising throughout the year. So yeah, and like you said, the public is maybe saying, hey, listen, we're not in a zero interest rate environment anymore. I can throw my money into a 5%, T-bill or 4.5% T-bill and get some kind of return without that volatility. So you're right. It's these things change the perceptions of investors. But I think the underlying theme with the metals, I don't think we've seen any type of top. I don't think we've seen anything that resembles a cure to balance sheet, deficit spending and so forth. We're still got a long road ahead. And I think the metals at some point will lift off again. They tend to move when people least expect it. And, like you, I kind of watch the sentiment to get a feel for the frustration out there. And it's definitely building out there, no question about it.
Okay, so I'm thinking Jan, Feb. So we'll see what happens. Maybe one more flush in the stock market takes it down, and I'm going to be buying that, and 95 about on the gold silver ratio. And so, guys, this should be on your shopping list if we get some type of washout and there's follow through on the bear raid that we had in December, and we're not just going to blow off to 6,400 in the S&Ps. Market sells off, maybe we get a break, but at 95 dollar the gold silver ratio, then I think you could be trying silver again. Here, let's just look at it one more time, Bob,
Yep.
and
Yeah. One other
wrap
thing.
it up. Go ahead.
Yep. One other thing is, this SLV, and I posted this last night. 30 million shares have been shorted
Yeah.
on SLV in the first 2 weeks of December, which is really odd given that the last 2 weeks of December typically is a very positive, or seasonality, very positive time for the metals. Why anyone would want to step in front of that seasonality um, is somewhat it makes no sense. But that's, you're talking, I think the highest short interest during the year was about 31 million shares, and so now you're up to about 51 million shares short on the SLV. And you see that,
Yeah.
the rate, the borrowing fee starting to rise as well. And these things, obviously, I'm watching. It's a little bit more technical, I guess you could say, but you watch these things because when that borrowing fee gets too high, and stock to borrow, the availability starts to drop. That's typically when you start to see a potential squeeze start to happen.
Yeah.
So these are all
So
things to watch for.
it's happening but not reflected in price.
Correct.
So it makes, and all of these things are pretty well known. I mean, you have to dig a little, right, Bob? But they're out there.
Yeah, I mean, yeah, to give you an idea, the 1,000 ounce bar premium, when I talk about premiums, on an industrial level, when you're buying it from the refiner, back in September, to buy a 1,000 ounce bar is about 7 cents over spot. If you're buying it with, taking delivery in New York, for example, at
Yeah.
a major a COMEX
Bank.
depository.
Okay.
Now that same premium is about 50 cents over spot. It's the premium has jumped, not the spot price, which is kind of strange with this EFP that's been reversing higher. So those are the types of things I'm trying to maybe bring to light.
Okay, well, 95 in the gold silver ratio is not any trip to Hollywood. It's just retracing back to where we were here. And, this was a big high up here when they were giving silver away. So maybe, we finish this sideways correction, and then the gold silver ratio takes a hit like it did here. So next year, I think it peaks at 95 and we go to 50. So that's a note for Pinkert for you, Bob. All
Yeah,
right.
that's one hell of a move right there.
All right. Anyway, I appreciate you keeping me informed, when you come here and what's going on. You have levels you're looking at in gold and silver that look attractive to you?
I mean, right now, from the physical standpoint, I'm buying silver here. There's the idea of trying to catch. I mean, you're more of a trader, so you're trying to really catch, maybe more of that lower, that try to get within 10% of
Yeah.
that low. For me, what I try to do is, because it's more long term, I'm really looking at the longer term picture, is trying to get people, because a lot of times when you do get that flush, people get scared, they end up not buying, and then you get the reversal back up, and then they don't want to chase or feel like they're chasing. So it's just trying to, again, try to get people sort of interested when price action's showing a good value, but again, at the same time, not charging a high premium for the products, which is, I think, really key. That's going to determine whether you can make money in this thing or not. But yeah, gold is a little bit more difficult. I mean, obviously, there's a lot going on in the next month. You got Trump taking office.
Yeah.
Yeah, I mean, there's a lot of uncertainties out there that obviously could.
Hey, Bob, what's your take on the drones?
I've heard that it's I've heard that some of these were early on they were testing the companies that were testing larger size drones that could actually potentially carry large forms of
Payloads.
cargo, I guess. But
Yeah.
you know, I don't. Who knows? I mean, at this point, they're all over the place. You could have copycatters. I mean, if it is nefarious and you know they're just lining up for some sort of you know, almost like that movie where the president got attacked. I forget what this was called. Um, uh, you know, we're all in trouble because I mean that's obviously drone warfare is obviously the next phase of or the future potentially of field warfare.
Yeah. Okay. I was just wondering if you know, maybe there was some alien invasion to come and you know, pick up a little silver demand and drive prices higher for everybody.
Either
And
that
they,
or
you know, huh? They're here for our
they're
metals.
bringing they're bringing you know a million trillion tons of gold from an asteroid.
Yeah, yeah. Yeah, anyway, Happy New Year, buddy.
Definitely, you too.
I hope 2025 is a great year for you and all your clients. And um, by the end of 2025, we see $50 silver. Okay.
Yeah,
All right, buddy.
sounds good.
So everyone follow Bob on X at Profits Plus ID, Bob Coleman. And we'll see everyone on Monday. Don't just count your pips, count your blessings, everyone. Have a great weekend. Adios. Thanks again, Bob.
Thanks, Dale.
All right, see you. Thanks, Ingmar.